Feels good to be here, be a part of all this, inspire investors from around the world. Incredible. Type in a 1 just to make sure you guys can hear me okay. Want to verify that audio is going through. My buddy Andrew's here. What's up, Andrew? Anthony's in the building. I like it. Cameron, how's it going? David, Danny Banks. I like it. What's going on, sir? Let's see. Oh, Deanna's here. David, Derek Henderson. What's going on, Derek? Fred, Janet, Joseph, Julian, Michael. A lot of mics. Tony Bennett. I hope it's the Tony Bennett. That'd be cool. Vladimir, how are you? Hope you're doing phenomenal. So today we're going to have a very interesting presentation. I'm so happy that Renee allowed me to do this because I've been wanting to do this for a while, and mostly because I'm terrible at PowerPoint. But number two, I think the biggest takeaway from the markets is really just trading them in real time and learning as you go forward kind of what the markets are doing, how they're moving, why they're moving, and just asking and answering a lot of questions as the market presents itself to us. So what I wanted to do is in this particular webinar today for the next 40 minutes is I wanted to back trade with you all here today. And those who are here live, and of course if you're watching the recording, thanks so much for tuning in. But I will need a lot of participation from the audience because you will be choosing not only what stock I back trade, but where I start back trading the stock specifically. So we're going to look at the daily chart. We can do weekly or 5 minute. We can do a little bit of a longer term, but I think the daily will probably be the easiest. So if anyone wants to throw in some ideas for a stock that you want me to back trade, go ahead and just try out that chat pane, throw them in there. Let me know what stock, and what we'll do is we're going to have someone pick the stock. We're going to have someone pick the year, and we're going to have somebody pick the month. And I'm just going to kind of start from there and just go progressing forward. And of course, I'll be answering any questions about the actual charting software specifically, and we'll kind of go from there. Steve, what do you think, man? Any particular stock that you want me to look at or back trade? I got a few in my pocket that I can use. What about you, Mr. Michael Ward? What's up, bud? Michelle Kwan's in the building. Nice. I like that. Mike Gordon, how are you? No particular stocks. You guys don't have any requests, anything independently in general? We could do cryptocurrencies. We could do a commodity like gold or silver. Let me just make sure I'm getting the chat pane right. I might be looking at it wrong. There's probably a good chance that I'm doing that. Move this over here. What about you, Renee? Do you have anything, any particular company that you like a lot that you want me to back trade? Let's move this over here. There's the questions. Yep, I apologize, guys. I was looking at the wrong chat pane. I was like, there's no one. I was totally looking at the wrong ones, guys. I'm sorry. Yeah. All right. So we're going to do this again. My apologies. I'm going to go with Southwest. I like this. Southwest Airlines. That's what Michael Ward chose. Southwest. Okay, I dig it. We had AC, BBF, Southwest, NQ, XLV, Ripple, E-minis, all kinds of good stuff. You were chatting with me. Beautiful. And again, sorry I was looking at the wrong chat pane. Guys, my apologies. I was looking at the chat pane between me and Renee. So, Southwest Airlines, why not? And we can try a few of the other ones as well. I had one trader asking, does this work on Ninjatrader? Steve Hill was asking that. I believe so, yes. I used to use Ninjatrader, and I believe they have a back trading function. If it doesn't work exactly the way this one in particular works, then you could always kind of jerry rig it. And what jerry rigging means, for those of you who might not be from the South, is just take the chart and just manually bring it back in time, right? Something like this, and just kind of go day by day or candle by candle and kind of back trade it that way. That's one way to do it. But this is a charting software called TradingView. This is the one that I use personally, and you can't trade from this. Well, you can actually. You can do it with Forex and some of the other brokers, but you can't trade stocks or options or futures or commodities from this yet, at least to my knowledge. But you can access it for free, and you do have the ability to do what's called replay mode. So at the top of your screen, you'll notice there's a little bit of a replay mode right up here. And that is gives you the functionality and the ability to go back in time and back test a stock. I will let each and every one of you know this is probably the absolute best exercise, hands down, that you can do to get better in trading. It doesn't matter what instrument you're trading, futures, Ripple, 30-year bonds, the NASDAQ, doesn't matter. This functionality of going back and building the day-by-day plan is simply, it's phenomenal. So let's do this. Let's go to Southwest Airlines. That's what Michael Ward suggested. Now, I want someone to pick the year for me. Whatever year you want. We're going to go back as far as it can go. If anyone wants to pick a year, and then we're going to pick a month, and then we're going to start that way. So now that I have the chat pane, I'll know actually what you guys are typing in. So Southwest Airlines, what year would you like me to start on? It's 2000. I have 2016 on the screen right now. It's 2018. Deanna says 1982. I wonder if I can go back that far. I don't think I can, but let me find out. Do I have a go-to date? No. So let me go over here to daily chart. I don't think I can do 1982, but maybe. I do believe Southwest Airlines was around that long. I don't know if they were publicly traded back then, but let's go find out. So this is February 27th, 1982. Deanna, there we go. 1982. We can do it. How cool is that? Oh man, this is gonna get real pumped. All right, so what month do you want me to start in 1982? Who wants to choose the month for me? Jason says, hey brother, good luck. Thanks man, appreciate that. So Deanna's all pumped. I did not think I could go back this far. I can be honest with you, I've never traded Southwest in 1982. I have done this for the entire Dow Jones though. What I'm about to show you guys today, I have done that for the whole thing. All right, so no particular month is being chosen, so let's just do the very beginning. Let's just start right here. All right, so what we're doing is I'm gonna zoom into the daily chart. And the cool part that I did not know about this, look at the volume. So George was just talking about volume earlier, and look at the volume, 3.9 million shares on average were traded on Southwest back at 49 cents. How cool is that? That's fantastic. So this is a back trading webinar, and what we're going to do is I would absolutely love it for as much participation as you guys have, as many questions as you have. But I want to show you kind of my process and procedure for this back trading. And what we're going to do, again, we're going to go day by day, candle by candle on Southwest and figure out exactly what we can learn, what we can take away, and most importantly, I want us to get better at learning the language of candlesticks. That's what I want to focus on. So all I'm going to use for my back trading is candlesticks, volume, and support and resistance. That's it. That's all I'm going to use, nothing else. Challenge accepted. So let's go ahead and draw some support and resistance lines. I'm going to draw one right here. That's a nice, pretty blue color. And then I'm going to draw one right about here. This is the previous all-time high right there. And then I'm going to draw one right here just in case. And then I'm going to draw one additional line, which is more of a shorter term line. I'm going to do that of a different color right about there. So just kind of give me an idea generally of where I am and what I'm going to do. Now, one of the most important aspects of trading before we jump in is understanding your time frame. That's a very underappropriated topic of trading, is knowing your time frame. And what I mean by that is, what are you trying to accomplish in your trading? Are you investing, meaning you love the company, you're going to buy and hold, you're going to be in this one for a few years? Are you trading it pretty actively? Do you have to pay some bills, right? I have to pay a bill here in about 3 days, and it's about 2,700 bucks. So I'm gonna see if I can make 2,700 bucks in the next 3 or 4 days in trading. Probably not, but good thing it's already the end of February because I've already done that. So not too stressed. But you have to determine your time frame, right? What are you trying to accomplish? Now, of course, everyone wants to make as much money as possible in trading. I get that. That's exciting. That's wonderful. That's why we're here. But for the vast majority of you, if you have kids and a family and a job and all these responsibilities, the time frame is more than likely going to be in the 2 weeks to about 3-month time frame. Would you guys agree? For most of you, I think I would probably argue. Now, some of you might be day traders. If you're fully retired, that's fine, but you got to know your time frame. So in this particular situation, what I'm going to do is I'm going to trade this time frame, the 2 weeks to 3 months time frame for Southwest. So I'm not just going to say, all right, let's just buy Southwest at 49 cents in 1982, and whoa, look at that. 38 years later, we're making so much money. I'm not going to do that. We're going to kind of get in and out of some trades. And again, the goal is, of course, to determine, learn, and figure out what we can extrapolate from the candle patterns themselves. So let's zoom in. And I've never traded Southwest this far before, but it's going to be exciting. Now that I'm zooming in, what I am notating and what I am seeing in front of me is two things. We have an increased volume. That's a good thing. You got a little bit of a morning star type of pattern. Now, again, when you're dealing with a little bit of a cheaper stock like this is right now, the gaps don't mean quite as much, and the candles can get discounted a little bit because the range of this thing is very, very small, right? You're dealing with pennies at a time. So what I did is I drew 2 lines for Southwest Airlines. I have a blue line at 44 cents, and I have this red line at 53 cents. One of the biggest takeaways of technical analysis is this. When you create your chart, that is your framework. That is your decoration, if you will. Think about it like me coming into your house and telling you how to decorate something, right? That's not really what you want to do. That's not really what I'm going to do. I'm not going to tell you how to decorate. I'm not going to tell you how to dress. I'm not going to tell you how to set up your house or your furniture. When you're drawing your support and resistance lines, that is your framework. That is your perception. That is your visual identification of what you're going to do at a specific spot. So, Nick, what I'm going to do is I'm going to create a plan right now on Southwest that is very easy. Super simple. I have a support at 44 cents. I'm going to create a plan to buy Southwest if it comes down to that particular price. Now, the big takeaway is going to be, is it going to come down to that particular price? Of that part, I do not know for sure. But what we can do in trading is very easily create a plan and follow it. So this would be an example of where I would like to buy Southwest Airlines, and this would be my stop. Let's determine why I'm placing my stop down here. First and foremost, I'm basing my stop because it's below this candle pattern over here. Right, and that's number one. Number two, it still gives me a good risk reward if the stock trade up to here. It's about a 2 to 1. About a 2 to 1 risk reward ratio, very close to it. And secondly, if Southwest trades down to here and kind of bounces around or whatever, I can end up moving up my stop up to that level, and that way I only lose half of my risk that I'm appropriating for this particular trade. Now, what we're going to do for the next 30 minutes is we're going to trade with a risk unit of 200 bucks. That means for every single trade that we take, we're either going to lose 200 or hopefully less and make 200 or hopefully more. On a cheaper stock, that will be a lot of shares, and that's okay. That's fine. So we'll just kind of practice that and see a little bit of what that looks like. Now, what most of you are thinking initially right now for Southwest is, what if Southwest never trades down to 44 cents? It's a very good question. If it doesn't trade down to 44 cents, then I won't trade it. I won't get filled at that order, and I will create a secondary plan, right? Always have a plan A and a plan B. I'm going to be looking for Southwest to break above here, pull back, and then I'll look to buy that dip. So we'll get to determine, and we'll figure out here momentarily what Southwest ends up doing. What I can say is I can already determine how many shares we're going to be buying here. So if your risk is 200, the difference between these two numbers is 5 cents, aka a nickel. So again, this is going to be a whole heap of shares. That will be $200 divided by 5 cents equals 4,000 shares. Now the cool part about that is 4,000 shares times 44 cents is still not a very expensive investment. You're looking at only an investment of 1,760 bucks. That's how much the investment would be in this particular setup. 1,760 bucks. Now, again, your risk is going to be 200 if the trade doesn't work. And and if it does work, hopefully we'll make a little bit more than that. So let's go forward a few days and just see what ends up transpiring on Southwest. And then just like the normal markets, you'll get to see in real time how we get the opportunity to update, change, and create a new plan going forward. So here we go. Let me make sure I did this right. I think everything looks good. Forward one day. All right, we have a bearish candle. Cool. So far, a little bit of volume coming in. It seems, or it appears, that we might trade down to 44 cents. So far, we're just kind of waiting. Next candle, nothing. Right? Now, this would be a tweezer top pattern between these two bearish candles. And again, we can pretend that this stock is a little bit more expensive, but a tweezer pattern means a little bit less on a cheaper stock because it's easier for those highs to match up. Before I go any farther, does anyone have any questions? Leon Bennett's in the building. What's up, buddy? Julian Moreland, John Jeffrey, how's it going, buddy? Jay Maddox, how are you? Does anyone have any questions before going forward? Before I click that forward button and figure out what happens next. Back in 1982 on Southwest Airlines. I was negative 6 years old. I was an irrational number. My sister wasn't even born yet. Man, this is going back. All right, so next candle. Here we go. Press the next button. Next candle, a little bit of a white candle. Again, smaller candle, a little bullish though. Again, with a gap, it means a little bit less because it's a little bit of a cheaper stock. The range is not very much, but the pattern would kind of be a potential double bottom that's beginning to form here on Southwest Airlines. Again, back trading, as you back trade more and more, your goal is to try to learn and find and see these candlesticks and chart patterns and get better and better at spotting them over time. So looking at Southwest Airlines, let's go one more candle in the future, a little bit of a bullish candle, again, coming off of that double bottom. All right, great. If this thing does double bottom off of this pattern, I will still look to take the trade bullish, but again, since I have this red line right here, the risk reward really wouldn't be that great, but I will give you some insight in just a moment of what you could do. So still haven't broken above that neckline, right? At this point, well, we're forming a nice consolidation, but it does look like a very pretty double bottom potentially forming. What I can see on this particular situation right now, or at least how it looks to me, is also could be a pennant pattern of some kind. So this could break in any direction on Southwest Airlines. Don't know what direction it's going to break yet, but kind of hoping or keeping an eye out for a potential bearish breakdown so that it can trade into my 44-cent limit buy. Now, what's cool about this is, if you keep in mind, is we've already been trading about a week. We've already put in a week's worth of data in about 6 minutes. So let's keep going forward, and there's the pop. All right, so there's the breakout. It did pop a little bit bullish. Now, we were talking about time frames, and we were discussing how you could back trade, and you can plan, you can do a historical replay and kind of figure out how you would have taken a trade, where you'd have taken a trade at, where you'd have bought, where you'd have sold, that kind of thing. What's important to note is, even though we are doing a daily chart, we can still look at a trade and say, you know what, if this was real time and I was a little bit more of an active trader, I would zoom into here, because I can't do that right now in this particular time frame. I can only stick to daily charts, which is understandable. Makes sense. I can't switch back and forth between time frames when I'm back trading. But if this was a real, market was open right now, you could say, all right, well, how about if we hopped into the hourly chart and tried to determine if we could catch a pullback on Southwest, place a stop right here, and then the target for the trade would be approximately this new red line. That, again, is about a 1 to 1.5 risk reward ratio. And you could say, sure, you could kind of formulate that possibly that occurs, or maybe that you would take that approach. But even the fact that you are thinking about it and getting an idea of what you would want it to do and how you want it to do it, that is also a huge, huge takeaway. All right, so I'm going to erase my drawings for a second. And again, just notating that, all right, we got a little bit of a double bottom. That's exciting. Let's go on to the next candle. There's the retest. What? How did I know that it was going to retest? Well, you didn't. I don't know that anything's going to happen at any particular point in time, but what we can do is we have these chart patterns that we get an idea of what could occur. So now, again, we're not able to do this right at this exact moment, but you would have the ability to zoom in or pretend you're zooming in into here and figure out if this pops and goes higher, this would be the opportunity to take a bullish trade because this is a double bottom pattern. Now, what if it breaks lower? Awesome, I have a limit buy set up. What if it breaks higher? Fantastic. Then we have a, what we've done is we've analyzed, determined, and planned based on the chart pattern that is forming. All right, you guys are ready to go? Let's keep doing the next one. Make sure I delete those drawings, erase the colors, turn the pointer back on, click forward. All right, so there's a little bit of a pop. Now again, very small pop, I get that. Next candle, nothing yet. Next candle, nothing yet, and we're breaking lower. So we never really bounce off of this. Never bounce off that double bottom, which says to me that if that double bottom's not gonna work, and again, a little bit of a cheaper stock, that's gonna happen on a little bit of a smaller stock like this. I'm just gonna keep waiting for 44 cents to hit. I'm going to draw what I want Southwest to do. I want it to do this, and if it does that, I'm gonna set up a limit buy area like that. Or I want it to trade lower, and then I want it to bounce off that area. I call these drawings Mr. Squiggles. This is my determination of what I want the market to do. Is the market gonna do one of these things? Maybe, maybe not, I don't know. But if it does do one of those, the biggest takeaway that you can have in trading realistically is the ability for you to say, this is what I'm going to do, and do it when it shapes up. All right, so we're gonna go for another day and just gonna keep going forward, pressing that forward button for a little bit and kind of go through some data to determine what the market's gonna do. It looks like it's doing the other pink line pretty closely. All right, so it did the pink line pretty close, pretty close. So now, what do we have to do, my friends? At this point, I have created or I determined that the market was going to move higher out of this area, either higher or lower. And so now I'm going to take my setup and I'm going to look to buy the dip, and I'm going to set my stop right here. It's a 4-cent risk. Now again, is the trade going to pull back? Maybe, maybe not. I don't know. One of the questions I get the most often is, Jeremy, how do you know when to buy the bounce? The beautiful part is you never know when to buy the bounce. What you can do, and almost the only thing you can do, is create a plan based on some form of information. And once that plan is there, no one knows if Southwest is going to bounce off of this price or not. That's exactly what George was mentioning earlier. No one knows what the market's going to do in the future. But what we can do is we can say, all right, there's a support line here. It should bounce off of it, so I'm going to set up the trade. That's what really good traders do. Real life traders will say, this is what I want the stock to do. They set up the trade, and then they get in regardless if it works or not. What a lot of traders will do, and type in a 1 if this has ever happened to you. You set up a trade and go, man, this is probably a good area, but maybe I need to wait for more confirmation, right? Stock pulls back, you wait because you're not getting the confirmation. This happens, and you go, oh man, what great analysis. I should have gotten back there. Yeah, we've all done that. We've all done that. And the way that we do that is based on the fact that we are waiting for the market to tell us what it's going to do. That's a losing battle. The market's going to do whatever the market's going to do. That's like you walking into an ocean and saying, can you stop, please? With a wave thing, with the salt water, with the sand, can you not do that anymore? You can't tell an organic, ever-changing, ever constantly moving and shifting organism to just stop moving. That's what the market is. So all we can do is react based on our plan. So this is my setup on Southwest. I'm going to create a plan to buy it on a pullback. Here's the question that some of you might be asking. What if it doesn't pull back? Michael, what's the answer to that question? What if it doesn't pull back? Well, then I won't get triggered into the trade and I'll have to set up another one. Here's a cool math tip for you, my friends. If you aren't in the trade, you're guaranteed not to lose money. And that's a really cool thing to focus on when you're talking about trading, is not losing. So let's go forward another day or two and see what happens. Oh, Snapdragons. I pressed the wrong button. I pressed real time. Shoot. I knew I was going to do that. I hope you guys took bets. All right, give me 1 second. Let me see if I can jump back to that. I was like 100% confident I was going to do that. I manifested it. All right, I think we were on, well, let's just go back to February 27th, 1982. We can go back in time and just figure out if that trade would have worked anyway, and we'll just keep doing it. No big deal. My lines will still be there. Snuffleupagus. That pray. Okay, cool. So we're in, definitely not February. We went a lot farther than February. Let me start. Here's where we were right here. Oh, shoot, because this is so good. This is so good. No big deal. All right, here's the cool part. So mentioned right here, this was the 28th of January. We've already gone about a month of trading. This is a month of data. This is practicing 101. Imagine how fit or in shape you could be if you could cram a year and a half worth of exercising into one day. Michael, would you sign up for that program? I would. Like, here's a year and a half of exercise in one day. You'll get a year and a half of results in one singular day. This is what you can do in back trading. It's phenomenal. So limit buy, we've already kind of seen, unfortunately, what it's going to do, but that's all right. It didn't pull back, right? It never, ever quite made it to the 52-cent limit buy. So now what we get to do is, as I just mentioned, all right, it didn't quite get there. So what we get to do now is what? Any guesses, TJ or Steve or Vladimir or Anthony or my buddy Andrew, Carlos? Michael says, don't buy, replan. Bingo. Hey, we didn't get filled. No big deal. What's the market going to do? Whatever it wants. What can we do? We create the plan for what? The future, right? We don't worry about what the market's doing right now. What the market's doing right now is irrelevant. We've already missed it. You never want to trade in the present. Again, this is at least my opinion. Never, ever, ever. You, as traders, only care about the future. So whatever the stock is doing right now doesn't matter. You missed it. If you ain't in, it don't matter. Go ahead and plan for what the next approach is and what you're going to do. Here's what's cool. We have a support resistance line right there. How do I know that this is a support resistance line? Because it worked as a resistance right here. Old resistance might become new support. So what I'm going to do is exactly what Michael told me to do. I'm going to just simply replan where I get into this trade. All right, so erase all the colors. What's really cool about this is, number one, you get a good volume spike. That's 8.5 million shares. That's a lot of shares traded. Secondly, this is something that I call a retest gap. The reason I call this a retest gap is because I'm going to circle people in a certain color. Let's call them the blue traders. All the traders in blue, right? If they bought around 48 cents, they're up pretty handily. Those traders in blue are going to sell to lock in profits. What we're about to trade, my friends, is one of my favorite chart patterns. And unfortunately, it's one of the least talked about charting patterns anywhere. The chart pattern I'm about to tell you guys is called the S-curve. The S-curve, the simple buy the dip, the buy low, sell high, the buy the pullback, the S-curve, where traders sell for a profit up here, buy low right here, and then hopefully make a profit on the upside. What most traders do, unfortunately, is they wait to right here to buy. They wait for the confirmation. They wait for everything to finally say, yeah, this is the time to buy. Usually the best trades that you are going to make are the ones that you make when you are most uncomfortable, when you don't have any signs that it's a good time. You plan the trade in advance based on previous information, and then you set the trade up. So let's do that now. I'm going to bring out Mr. Squiggles again, and I'm going to have him dictate where an S curve would be. All right. So Mr. Squiggles, the man of mystery, looking for a pullback like this. Actually, I'm going to draw that a little bit better. It should have gone a little higher, up to here, pullback, dip. That's really what I want. That is the S curve. My friends, this is one of the most impactful things you're going to see all day, hopefully for the rest of your life in this particular webinar. This was, when I learned this, it was massively a huge breakthrough. This chart setup, this pattern right here, no one knows if it's going to work or not. It doesn't matter, Jason. All that matters is, are you going to take it if it does it? And the answer is, I'm going to. Right? That's all that matters. Are you going to do the trade based on what you said you were going to? No one else is going to make the money for you, ladies and gentlemen. So when you set up the trade, it can be as easy or as difficult as you want it to be. The markets can be as difficult or as simple as you want it to be. If you want to learn 457,316 different indicators, different items that you look at before every trade, that's fine. If you want to trade just off of support and resistance, S curves and moving averages, that's cool. If you want to base trade your setups on volume and candlesticks, that's fine. So here's going to be my setup on Southwest, 56 cents by 50 cents. Now, question, why do I have my stop at 50 cents? It's a valid question. Why do I have my stop there? Well, I could put my stop here, right here, but that could trade down and wick out because this red line, I have that red line as an old support new resistance anyway. I already have it there. So it could come all the way down to that line and then bounce. I have one trader might be thinking, all right, Jeremy, well, if that's the case, why don't you take a limit buy and put it down there and set your stop lower? You could do that. Or what if you had an entry for some of your position at one spot and some of your position at another spot? What if you had an entry to get in half of your position where the green line is, and then the other half of your position, so you get in half here and then half here? What if you did that? You could also do that. You can do anything you want in the market. You are controlling everything other than the market. That's what's cool. You actually have a lot more control than you think you do. You can't control how it moves or how fast or when, but you get to control, are you going to get in or not? When you're going to get in, where you're going to get in, what time, how long, for when, what instrument. You get to control all of that. So let's go forward a little bit and figure out if this bad boy has that S curve or not. All right, I won't press the play button. Let's go next. Nope, not yet. Continuing higher. Next. Woo! Retesting, and we're filled. Whoa! All right, so we're getting filled on a pullback. The S curve is here. Ladies and gentlemen, Mr. Squiggles for the win. So now what we get to do is the fun part. We wait. Do we get stopped out? Does it go higher? Who knows? But this is a very common, very easy to draw and learn chart pattern in the market, that S curve. The buy low, sell high, the buy the dip, the buy the pullback. It's everywhere. It's a very fractal pattern, right? There's one right here. There's one, a bigger one right here. That pattern is everywhere. Very important pattern, very easy to do. Just buy the dip. Sometimes it works, sometimes it doesn't. Another mathematical fact for you, if you lose less money than you win, you'll be profitable. So here's the part that we said, the time frame. This is where the time frame comes in. We mentioned that we would do about 2 weeks to about 3 months, right? That was our general time frame. So what I'm going to do is go forward 2 weeks. This really is the easiest part of trading if you make it the easiest part. All right, what you do is once you're in the trade, Michael, Jason, Vladimir, Jay, Janet, everyone who's here, you walk away. Let the market do the work for you. You walk away. Let the money work 24 hours a day, 7 days a week, 365. You don't need to work that much. Just walk away from the computer for a certain period of time and let the market do whatever it's going to do. I'm going to choose 2 weeks. So we're going to go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's 10 trading days. What would we do from here? Well, 10 trading days. My stop, I would take it up. I would move it up a little bit. All right. New stop. And that would be my new stop on the trade. So now I will lose less than my original risk unit. My original risk unit was $200, right, as we talked about earlier. So I moved up my stop, and I'm going to wait another 10 trading days, which is another 2 weeks before I move my trade again, or before I move my stop again. Jason said, easier said than done. Yeah, it's like anything. It just all comes down to willpower. How bad do you want it? That's all. How bad do you really want it? All right, 10 more trading days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, ladies and gentlemen, this was the point of the entire session. Back in 1982, trading Southwest Airlines, which I've never done. That was 6 years before I was born. Type in a 1 if that's just beautiful. I mean, folks, you saw it happen real time. I didn't pick this. You guys picked it. You picked the dates. You picked the time frames. That's phenomenal. I mean, that is mind-blowing. We went candle by candle in the past, showing you that you don't need anything fancy to trade. You don't need an exorbitant amount of information. What is most important in trading is what is in your mind. What are you focused on? What do you want to accomplish? What are you trying to do? Trading as easy or as difficult as you want it to be. This could have been a very profitable trade. Question could simply become, when do you take your profits from here? Right? Well, our original stop was 50 cents. So if I do a long position, I'll do something like this. All right, this is another tool that trading uses. It's pretty nifty. Move that down to 50 cents. So this would be 2 times my risk if it got all the way up here. So if I risk $200, that would be 400. What I'm going to do is I'm going to try to stretch it. I'm going to try to get 3 times my risk, which would be $600. 75 cents is my target. Why would I choose 75 cents, Jason? Any idea? Because that is the previous support resistance price that I drew. And then once I hit 75 cents, I do all of this over again. I do all of it over again. If it breaks above 72, I look to buy this dip and I trade it into 84. If it doesn't work and it breaks down, I get stopped out, trade back down to here, and I look to go bullish again. Right? Buy low, sell high. So for time intensive purposes, believe it or not, we've already been together 40 minutes, almost. So let me just kind of press the play button a little bit to just give you an idea of what transpires from here. Because just to give you an idea, I could do this hours and hours and hours and hours at a time. Look at that gorgeousness. Woo! I mean, traded, this was right about 2 R's right here. 2 times the risk. Pulled back to retest it again. Traded back up to that exact same price. Could have sold there, traded back down. But it did end up eventually hitting your target of 75 cents. That trade would have taken approximately February to June, which is about 5 months. That's a swing trade. Not bad for about a 30% return on investment. Not too shabby. And that entire time, all you had to do, once you were in the trade, is be patient. That was it. Have some patience. You got your stop in place. What's the worst the market's going to do? Stop you out? Oh, no. Right? Just let the market do its thing. Sit back, relax. You either lose a little bit of money or you make a lot of money. I mean, that's a pretty easy formula. Ladies and gentlemen, any questions so far? Michael, thanks so much for being here, man, and give me so much energy. I love it. Jason, thank you. Deanna, I appreciate it. You were awesome. Neil, do you have any questions for me? Robert Carroll? Tony Bennett, what an awesome name. Bob, you good? Butch? Well, I don't have any sales pitch because all of my education is free. So what I will say is if you want to see other back trading done by me, I have a lot of courses on YouTube. You can just type in back trading in real life. You can type it into Google, and I will have the really the top 2 or 3 that come up. So back trading in real life, here's the top 2 results. You can also type in videos. That is me doing what we just did for over an hour and a half. This is one of the most crucial exercises that you can do in trading, my friends. This is it right here. This is it. I told people once, if you want to make 10% return every month, you should do this exercise 1 hour a day, every day. If you want to make 10% a month, if that's kind of your goal, 10% every single month, you should do an hour a day every single day. What if you want to make 20% a month? Any guesses how often you should do this? 20% a month. How much should you do it? 2 hours. How long, Jeremy? Every day. For how long? 2 months. Right? So if you want to make somewhere in the range of 20%, again, guys, this is just an example. It just gives you a visual example of how often you should be doing this. Right? If you want to do 30% every single month, then you should do 3 hours every day for 3 months. It is a schedule that is intense. It is a very tough schedule, but it is superiorly worth it. What I will say is the only thing that I will mention in this particular webinar is very easy, very simple. Please tell everyone about real life trading. Go help us enrich lives together. There are people from all around the world who need to learn this information so that they can become financially independent traders. People who have no mortgages, no debt of any kind, no car payments. They can do what they want, when they want, from where they want in the world, regardless of age. If you want to back trade with me, email me, jeremy@reallifetrading.com. Maybe me and you can schedule something and we can work a way out where I can work on some coaching. We can, I'm not spelling real life trading right. Real life trading, sorry, it's harder with the cursor. reallifetrading.com. I think you all know my email. Just find me, type in real life trading in YouTube. If you have any questions at any point in time, just reach out.